So,
हेलो हेलो साथ। चलिए शुरू करते हैं with a new topic which is 4.2, which is your contingent assets and contingent liabilities. I'm sharing my screen and let's get underway with the new topic. Now before we move forward, in 4.1 we discussed about a definition of liability. Can you please repeat what is liability when we record the liabilities?
when we have an outflow of a future probable asset,
Future probable asset outflow. एक example दो.
uh, uh, when we are recording a liability for a cash we have to give to a supplier, so we record in accounts payable.
Yeah, so your definition has a 3 points, and 3 points you have to remember because that's the official definition. Number one, there is a present obligation. That means a liability is 100% certain. It is called a present obligation. Number two, as a result of a past event. So for supplier, you have purchased the goods. For wages payable, you have taken a wages services. Salaries payable, you have taken a employee services. So a liability is arising as a result of past event. And third condition, settlement of which requires a future economic outflow, maybe a cash or any other asset. So if three conditions are met, in that situation, we are going to record a liability. Now, there could be a scenarios where there is a contingent liabilities and contingent gains. It means there is no present obligation right now. However, you estimate a situation, condition, or a circumstances which are uncertain, not confirmed yet, but they are uncertain, which can either result in a possible gain or a possible loss. So it is called a contingent liability. For example, you are selling a mobile phone and your mobile phone has a 6 months of warranty. Now, today, no customer has come back yet. So, there is no actual liability for you because there is no present obligation. However, because of the liability, because of the warranty claims, there could be a scenario where in future the customer can come back for the warranty of the mobile phones. That means it is a contingent liability. It may come in the future, it may not come in the future. Or, for example, let's say you have invested into a one underpaying asset, and that asset is likely to be doubled up within next 3 months. There is no actual doubling up yet, but you just estimate. So, there could be a contingent gain. So when there is a present obligation, you record a liability. However, when there is not a present obligation, but the situation, condition, or circumstances indicate that there may be a future gains or a future losses, then it is called a contingent gains or a contingent losses. So in this FAR 4.2, we will see a few examples of contingent loss and contingent gains, and when a transaction should be recorded as an accrual, or when only a disclosure is required, or when you can completely ignore a transaction. So all the conditions we will see. So to start with, the definition of contingency: a contingency is a existing condition, situation, or a circumstances which are uncertain, which may result into a possible gain or may result into a possible loss. You are right now not sure. You are waiting for the future events whether you will have a gain or a loss. Now the question is whether should you record a loss today, should you record a gain today, should you disclose only, or should you ignore? So all those topics which we are going to see in a moment. Now there are few examples. I give you a one example for the warranty. There are few examples. What is the meaning of a loss contingencies? So let's just see few examples first, and then I'm going to give you one master table. You just have to remember that table, and the entire chapter will be solved. So first of all, what is the loss contingencies? So example, collectability of the trade receivables. If you have a doubt that 5% is not going to pay, it means there is a present obligation. You create a accounts receivable bad debt provision. However, for one of the customer, you estimate that this customer is going to default in the future if he is not going to get an external contract. Now there is a uncertainty. If the customer is going to get an external contract, he will pay you. Otherwise, he will not pay you. So you have to decide. You have to make a call whether you need to make a full provision or you just need to make a disclosure or you have to ignore the stuff. So we will assess when provisions are required, when only disclosures are required. Few other examples of the loss contingency is a product warranty, which you generally give, or coupons, which you generally give to a customer for a future purchases, or there could be a risk of loss because of the fire or explosion has taken place or likely to take place. Let's say you have a property in such an area where earthquakes are very common. Every 6 months, there is a historical trend that earthquake keeps on happening. Now, if you can estimate, you can record the provision, otherwise, you can make a disclosure. So, technical aspects we will see. There could be a threat for the exploration of the assets. So, let's say you have a very haphazard chemicals which are used inside the premises to manufacture your goods. And even if a small leakage can lead to a big fire, so there could be a threat for the deterioration of your asset. There could be a pending litigation or a threatened litigation. Now, for example, I say I'll see you in court if you are not giving me this product. Till today, I have not received a notice yet. So now there is a contingency that you may go to a court, you may not go to a court. Actual or possible claims and assessments. Now, again, whether you want to make a provision or you just want to make a disclosure, we will see the cases. So, all these are the examples where you have to assess whether a full provision is required. It means there is a present obligation as a result of past event for which future economic outflow is required. If all three conditions are met, it's a accrual, it's a accounting needs to be done. And then if there is no present obligation, then you have to assess. There is an uncertainty whether you will have a loss or not. If there is an uncertainty, you have to make a call whether accounting is required, only disclosure is required, or you need to ignore the item. So this is all about loss contingency. There could be a gain contingencies as well. Now these are the items which are uncertain for a future gain. Now, back in FAR 1, when we were doing a basic concept, we learned a one accounting principle, prudence, where we learned that we never record estimated gains. We wait for them to actually realized. So same principle is being followed here. So if you have a gain contingencies, for example, now you have sued someone and you expect that you will get a settlement of $1 million after 6 months. So there is a contingency. You may get, you may not get, but it's a gain side. You are on the gain side. So you will not record anything today. You will wait for the actual gain to recognize. So gain contingencies are never recorded, but whether they needs to be disclosed or not, we will see in a further session. Or maybe there is a possible tax refund. So anything which you expect, which is a gain, you don't record anything upfront. You wait for actual gain to realize. For loss, you may have to account it for. Now I'm skipping section number 2, 3 right now. I'm straight away going into a one table. This is your master table, and if you understand this table, everything we will going to understand in a moment of time. So when you are supposed to accrue the amounts, so accrue the amount means when you are going to record the journal entry in the financial statements, or when only disclosures are required. Only disclosures are required, or when both is required. So if there is a tick in both the boxes, it means you have to accrue, you have to disclose. If there is only a tick mark in the disclosure box, you just have to disclose. And when you disclose, you are going to disclose the nature and amount. And the third option is you can completely ignore everything. So before again we go one by one item, I'll again give you a one shortcut formula to remember this particular format. If in the question you see a word which is probable plus reasonably estimable, so if there is a word probable plus reasonably estimable together, if you see both this word, then you have to accrue the amount. We'll understand what is probable and reasonably estimable in a moment, but this is from the exam point of view. If these two words are given in a transaction, probable plus reasonably estimable, then you have to accrue plus you have to disclose as well amount, also the nature of the transaction. If you don't see either of the word, it means either probable word is missing or reasonably estimated word is missing, and you just have to disclosure about the amount and the nature. Again, reasonable possibility, you don't have a word probable or estimable, so you are not going to accrue, so you are just going to disclose. If you can see a word remote in the question, then you have to completely ignore. So now what I'm saying, there are three possible words in the question, and these are the technical words every time they will give you in the question. If they use a word remote, that means you will completely ignore the transaction. If you see two words together, probable plus reasonably estimable, then you will accrue plus disclose. Rest any other situation, you will only disclose and you will only disclose amount and nature. अब एग्जाम के लिए याद कैसे रखोगे? अगर रिमोट वर्ड है इग्नोर, प्रोबेबल प्लस रीजनेबल एस्टिमेटेड वर्ड है अक्रू, अदरवाइज कुछ भी दिया है रीजनेबल पॉसिबिलिटी, गारंटी, प्रोबेबल, नॉट रीजनेबली पॉसिबल, any other combination, only disclosure are required. You have to make sure for accrual, reasonably estimated what is very important along with probable. So this is N condition. So two conditions are met, accrue, remote word is there, then you are going to ignore the things. Otherwise, you are just going to disclose the amount and nature. Gain contingency, if it's a remote, we are going to ignore. If it is probable or reasonably possible, even reasonably estimable, still you are just going to disclose. So gains are never recorded until they are realized. So this is a quick summary of the table. Table में कोई question है आपको how to solve the practical question from the exam point of view?
The third last lost contingency that is remote but is a guarantee for others.
So guarantee for others always needs to be disclosed because you don't know when a remote will become the reasonably estimable or probable or reasonable possibility. So if you are giving a guarantee to someone, always you need to disclose.
What do you mean we are giving a guarantee?
So for example, let's say I have taken a bank loan to purchase a flat, and you have given a guarantee that if I default, you will pay on my behalf. So you don't know whether I will default or not. So there is a contingency involved. But if guarantee is given, there is always an external threat. So you will always disclose those transactions.
Okay.
Okay, now let's go back to the section number 2 and let's read whatever we have done in the table. So first of all, gain contingency, we know it can never be recorded. If it's a remote, ignore it. If it is not remote, only disclosures are required. So let's go through. Again, contingency are those claims which you have a right to receive the asset whose existence is uncertain, but it may become a valid upon the occurrence of the future events. The gain contingencies are not recorded in the financial statements because to do so, it may result of the recognition of revenue prior to its realization. An entity should disclose the contingencies that might result in a gain in the notes to the financial statement, but you have to be careful that you are not misleading the readers of the financial statement. So if it's a very remote, not even disclosure is not required. If it's a reasonably possible, reasonably estimable also, you will just disclose into notes to accounts that there is a possibility that we are going to win a lawsuit in next 6 months and we are likely to have a gain of $1 million out of the lawsuit. In all the cases, you have to make sure that you are not misleading the users of the financial statements. Now, there could be a loss contingencies. So loss contingency, you have a three things. First of all, what is the meaning of remote? Remote means there is a very, very, very less chance of it occurring. For example, I am thinking hypothetically that I am manufacturing a one phone. I have manufactured 1 million mobile phones. One of the phone will blast somewhere and somebody is going to sue me. Now, that's the hypothetical assumption. It may happen. One in a million is a possibility, but it has a very, very remote chance of occurring. There is no underlying data to rely on the facts of the situation. So, something is very, very remote or a hypothetical situation. It's a slight chance of occurring. You ignore, you neither accrue nor you disclose anything. Then something is called a probable. So probable means it is a likely to occur. It is very much certain that this is going to happen. Now there are two things. If it's a probable and reasonably estimable, for example, let's say you have sold a one defective mobile phone, a customer has filed a lawsuit. You know you are going to lose the case. So there is a 100% chance that you are going to lose the case in the court, but you don't know how much will be the penalty. So if the penalty can be $100,000 or $200,000, or you don't know. So if there is a guarantee that you are going to lose the particular item, you will have a liability in the near future. That is called a probable. It is very much likely to occur. Now, if amount can be reasonably estimated, that means you have a reasonable possibility plus estimation available. Two conditions are fulfilled, and you provide the accounting entry in your financial system. If amount cannot be estimated, then only disclosure is required. And something in between. Remote means there is a very low chance of occurring. Probable means very high chance of occurring. But you fall somewhere in between. You don't know what will happen. Let's say you are very confident that we will defend our case. Customer is very confident that he will win. So both the teams are going neck to neck. You don't know what will be the court judgment. That means there is a reasonable possibility that you may win, you may lose. So you are in between, only disclosure is required. So it's again falling from the same table. So let's go back again to the same table once again. So if you feel something is probable plus estimable, then you have to accrue. If it's a remote, ignore. If something in between, only disclosure is required. And amount, if you are not sure, you can just give a range. Maybe a customer has filed a lawsuit for a $2 million of penalty, but you expect a settlement somewhere between 1 million to 1.5 million based on the lawyer's best judgment. Let's again read through this theory section. All these things are part of table only. So loss where it's probable plus reasonably estimable, it means you have to provide the provision. Now a provision is required when you are have a both the conditions exist. What are the both the conditions? Number one, a loss is probable, and number two, amount can be reasonably estimated. Now there can be a range also given to the question. Now, whenever range is given to the question, first you have to look for the best judgment assessment. For example, let's take the same example of mobile lawsuit. A customer has fined for $300,000 of the claim, but your lawyer says that no, 300,000 is too much, but the court may give a judgment somewhere between $100,000 to $250,000, somewhere in between. Now you have to use your best judgment that what should be the amount. Sometimes you will take a lower limit. That is what a gap expected. So if you can't estimate the exact amount, then a lower limit is accrued, but a range is disclosed in the notes to the financial statement. So this is very important. Accrual will be done with a lower amount, but a range of the possible liability is disclosed in the notes to account. Let's go back to the table again. So when you are going to accrue, either you estimate the perfect liability, or if you have a range, then take the minimum amount as the liability. But in the disclosure, you have to give a range. So in our example, you will take a 100,000 as a liability, but disclosure will say that your actual loss can fall in between $100,000 to $250,000. Now, there could be a possibility that amount is not reasonably estimated. Only a loss is reasonably possible. You are just supposed to disclose the nature. Amount should be in the range if it is available. And if loss is remote, then nothing, you are simply going to ignore everything. Now, एक बार example number 1 go through करो. If you have any questions, एक बार पूछ लो. So it's around the same concept, should be easy to follow.
Okay. For insurance, even though we know that they can pay, we will not record any amount.
Sorry, what is insurance means?
Insurance coverage amount.
That doesn't matter, वो तो आपको लॉस को कम करके देगा आपको. So what is insurance? A reimbursement if actual loss happens. So if there is a insurance, there is no insurance, generally it will not matter unless there is a 100% reimbursement kind of insurance is agreed. So for example, if you say if I have a loss, insurance company will bear 100%. Then situation may be a different because then your pocket is not going to hit with any dollar.
Okay.
Now let's go to exam. I'm not covering the concepts because they are already covered back in the basic concepts. Example number two, a basic concept of accruals, and then followed by example number three, again the basic concept of the accruals. So both over to you. First example number two. ध्यान से पढ़ना and just try to interpret the question first.
Okay.
Easy. So you are just accruing the premium expense matching principle, the year in which the revenues associated with these coupons are sold, you are going to recognize the expense there. And when actual liability will arise, you will offset from your balance sheet account.
But will the company not just record the whole premium expense at the start?
That is exactly what is happening, right? Premium liability. So this is the transaction you are recording for the outstanding premium claims. So whatever claims are done, they would have recorded the expenses. So the question is asking you for the liability which is there after the claims are done. So the 600,000 coupons which are redeemed, they would have recorded the expenses when they were redeemed. Now you have a 450,000 of the coupons which are yet to be redeemed. So this will be redeemed in future. It means you have a present obligation of 4,50,000 coupons for which you have to provide the expense today. So this entry is for the 4,50,000 coupons only. This is not a 100% entry.
Okay.
So example number three. Again, very simple one.
Why is the warranty expense 12%?
क्वेश्चन बहुत केयरफुली पढ़ो, क्वेश्चन में ही इसका आंसर छुपा हुआ है.
We can just add the percentages every time, or uh, for
No,
each year we multiply the sales and then the.
no. See, read the question carefully. What question is saying that ABC Corporation has a 3-year warranty against the defects. That means whatever item I have sold today, I have to give a warranty for 3 years. Now, company is estimating that 2% of the claims will be made in the year of sale, 4% after 1 year, and 6% after the second year. It means overall company is estimating 12% warranty claims will be done, 2% in the first year, 4% in the second year, and 6% in the third year. So that is why 12% is the provision made. So first year में जो आपने 2,50,000 का सेल किया है, उस पे 2% people can come in year one, 4% people can come in year two, and 6% people can come in year three. 5 लाख का जो आपने सेल किया है उसमें 2% will come in year two, 4% will come in year three, and 6% people will come in year four. And 7,50,000 का जो सेल्स किया है उसमें 2% people will come in the year three, 4% in year four, and 6% in year five. However, it means there is a present obligation where a company is estimating that people are going to come. Now, this is a kind of a contingent liability. Sorry, I used the wrong word. There is no present obligation yet. Official claims have not come, but you estimate that the warranty claims might come in the future. It means there is an uncertainty, but now company can reasonably estimate that 2%, 4%, and 6% are the criteria, and hence you accrue the liability. So overall आपको 12% का risk है. So what is the first year? 2,50,000. अक्रूवल कॉन्सेप्ट क्या बोलता है? मैचिंग प्रिंसिपल कॉन्सेप्ट, जिस साल में सेल्स हुआ उसी साल में पूरा एक्सपेंस रिकॉर्ड करो. तो ये 2,50,000 के सामने जितना भी वारंटी एक्सपेंस आ सकता है, विच इज 12%, शुड बी बुक्ड इन ईयर वन. So warranty expense account debited 30,000 to warranty liability 30,000. Now actually in the year one, $10,000 of the people came and asked the warranty. So now you are not going to repeat the warranty expense. Rather, you already have a provision account. You will going to offset the actual claim against the provision account. So your second entry is warranty liability account debited to cash if you are giving cash to the customer, or if you are replacing the goods, then inventory will be credited for the $10,000. So this is the story for the year one. Now year two, you have done a sales of 5 lakh. Again matching principle क्या बोलता है? जिस साल में revenue generate हुआ उसके सारे expense उसी साल में record करो. So 5 lakh into 12%, 60,000 is a warranty expense debited to warranty liability credited. Now actual claims कितने आए? $20,000 के. So this will be now offset with the liability account. So warranty liability account debited 20,000 to either cash credited if cash is given. If you replace the product, then inventory is credited for 20,000. Now in year three, again matching principle क्या बोलता है? जिस साल में revenue generate हुआ उसी साल में expense record करो. 7,50,000 into 12% comes to $90,000. So warranty expense debit to warranty liability credit 90,000. Now actual claims कितना है? 30,000 के. So warranty liability account debited to inventory or a cash 30,000. Now technically at the end of year three आपके पास क्या situation है? You have a liability of 30,000 plus 60,000, 90. प्लस 90 1,80,000। 180,000 में से क्लेम्स कितने आ चुके हैं? -10,000। 20 दैट इज 30, -30 दैट इज 60,000। सो 1,80,000 का आपने लायबिलिटी क्रिएट किया था, उसके उसमें से आपको 60,000 के क्लेम्स ऑलरेडी आ चुके हैं। सो 1,20,000 के क्लेम्स अभी भी पेंडिंग है, विच इज योर नेट लायबिलिटी बैलेंस इन योर बैलेंस शीट।
But in year three, won't we know that year one is finished? So
आप
we
मैपिंग नहीं करते हो ना। इफ यू आर डूइंग द अकाउंटिंग इन सच अ वे कि अगर आप मैप कर सकते हो, सपोज इफ यू हैव अ कंडीशन that at the end of the year 3 we will not do any replacement, and if you can identify कि for example year 1 में 10,000 आ चुके हैं, so this all 100% pertains to year 1। 20,000 ईयर टू में आए हैं, इफ यू कैन आइडेंटिफाई हाउ मच पर्टेन्स टू ईयर वन, हाउ मच पर्टेन्स टू ईयर टू, गुड। एंड देन 30,000 के ईयर थ्री में आए हैं, इफ यू कैन आइडेंटिफाई हाउ मच फॉर ईयर वन, ईयर टू, ईयर थ्री, गुड। इफ यू हैव दैट स्प्लिट अवेलेबल, देन आई अग्री टू योर पॉइंट। फिर हम लोग ऐसा बता सकते हैं कि 30,000 का टोटल प्रोविजन था, उसमें से हमें ईयर वन, ईयर टू, ईयर थ्री में मिला के 22,000 के क्लेम्स आए हैं। 8,000 आर लैप्स नाउ। Now customer can no longer claim warranty for year one item, so reverse the $8,000 provision। but वो कोई डिटेल्स आपको क्वेश्चन में दी नहीं गई है। but if it is given, then yes, that approach is not wrong।
okay.
Okay, so this ends your contingency topic. Now tomorrow we are going to start with a bond accounting. So we are just going to learn a lot of basics first कि bond operate कैसे करता है। There will be a two interest rates for you. One is a bond stated interest, and then you will have a one market interest. And then we are going to learn about effective interest method first, and then we will go in deep about how entire bond accounting happens when it is issued at a discount, issued at a premium, all this stuff.
And
So
can you go up to the present value table? Up, up the this page. Uh, Here I have a question that will the present value rate be given or it will
then
be calculated?
नहीं तो मैं आपको बताऊंगा कैसे कैलकुलेट भी करना है, बट दे दिया जाएगा। इट्स वेरी
Okay,
सिंपल, इट्स अ 5 सेकंड जॉब, तो मैं आपको कल बताऊंगा कैसे कैलकुलेट करते हैं।
okay,
ठीक है, सो आई विल सी यू टुमारो। सो विल स्टार्ट विद फार 4.3 देन।
okay.
ऑलराइट, थैंक्स।